Good evening. This is Duane Lowry for the DPP Green Desk for a Sunday night commentary. Basically, I think there are two factors that trade's going to look at, digest, and try to evaluate. First being weather, second being outside markets influence, concerns about global economy, Europe, the euro, etc. Um, First of all, as far as weather is concerned, I see the weather as being supportive and maybe quite a bit supportive. Um, Friday's price action initially absorbed a lot of bearishness and panic associated with global economic concerns, and that's why the market was down early. The market quickly and clearly rejected that. By the time we got to the midday weather forecast, those forecasts were adding moisture in for this week that we're about to experience now, and that got a bearish flavor for the grain trade late in the session, as did a weakening of the outside markets. I think as we approach here Sunday night, the weather forecast has too many acres in the Midwest that has too little precip opportunity during the next 2 weeks. Rains that were expected here this week in Friday's midday forecast do not look as impressive, and in some cases they've been removed. I think that you're dealing with a situation here that um, the marketplace is going to want to add back weather risk premium, what if premium, that type of situation. And I think that the outside market situation, um, number one, I think the grain trade is pretty much ready to divorce itself. We spent all last week absorbing a lot of bearishness and panic associated with that. And I think for the most part, these outside markets are at a point where they should be ready for some sort of stabilization or a trend change or a recovery period ahead of us. And I think that's something that's going to unfold here over the next few weeks. The Fed has a meeting on June 19th and 20th. I think the buildup going into that Fed meeting will be increased talk about the Fed having the conditions necessary to provide political cover for them to choose a more stimulating type of approach, whether that develops into some clearly new operational activity at this meeting on the 19th or 20th remains to be seen. And I think there's arguments against that happening, but at the same token, I think all that we have to see happen here over the next couple of weeks in front of that meeting is a belief that the Fed is moving towards that uh, direction where they are going to have a more accommodative role. I think you're also starting to see world leaders step into the political arena of what's going on in Europe and weigh in on the idea that um, Europe has got to come to a conclusion that austerity measures alone will not solve their issue. They've got to look at more at providing methods of growth and economic stimulus and working together to achieve the necessary framework to make that happen. And so I think that we continue to move in a direction where that is more likely in the months ahead. And I think we're seeing a situation that the panic and concern displayed in the last couple of weeks regarding Europe probably has reached some sort of culmination point here with Friday's trade, and whether there's some spillover initial weakness there this week, I don't know, but I don't think it'll be down to any degree or any type of momentum building scenario like we saw last week. So I think you're going to see stability develop on that front, and the weather certainly appears concerning. Now, I want to point out here that I certainly have probably at least as bearish of overall longer-term outlook as many, and probably more of a bearish outlook than most, and certainly was in that camp for quite some time. But I think that from the uh, right now perspective, while the crops, I think, are, in generally speaking, in most places are off to a great start and in good shape, I think we've already discounted quite a bit of that. And I think the fact that we don't have much precip in a 2 week outlook that comes on the heels of the last 30 days with quite a few acres in the Midwest experiencing, say, 50% of normal precip and a certain amount of acres receiving maybe 25% of normal precip, especially in the last couple of weeks. You start tacking on the next 2 weeks with limited precip, and I think you're going to start to elevate concerns. Temperatures are not a significant concern. If that were to begin to show some hotter temperatures out there, I think you could quickly elevate the emotions. I don't think the temperatures are that much of a concern in today's forecast, but you certainly have too many acres or enough acres of that with limited precip that this should become somewhat of a concern. And I think that the technical conditions are poised for, at minimum, not providing downside momentum and follow through to Friday's weakness, and probably providing stability, and probably position that if we can get the initial strength maybe started with a weather concern, I think the technical conditions are such that it will encourage buyers to step in and start to take on some ownership here. The market's relatively clean after the corn market experienced basically a bullish only mentality for months and almost forever, it seems like. Um, in the last few weeks, there's been an acceptance of a longer term, more bearish outlook. There's been an acceptance in the last couple of weeks that the market has more downside risk, has limited upside potential, and people were very disappointed with price action last week, while I, on the other hand, thought it was relatively stabilizing. If you go back to mid-morning on Friday, you were still steady on the week. You end up down about 11 cents in the week, and that's after absorbing a lot of bearish weather sentiment, a lot of economic concerns, and a lot of just demoralization, people exiting long positions and things of this nature. So I think the markets have held in here relatively well. Soybeans Friday made a new low for the move. Didn't really close on the lows. Had a very wild gyrating performance. Made those lows early, rallied significantly off the lows, and then failed again late in the session. I think that the weather concerns, as traders start to ponder that, they're going to get the first of the season crop condition rating for soybeans Monday afternoon. The odds are we're going to get something closer to normal, or somewhat disappointing if people are looking for an exceptional start there. And I think that's going to be a reminder to people that we just don't want to lose any yield potential in the U.S. this year for soybeans. And I think it'll be easy for the trade to quickly embrace some weather concerns. So we'll see how everybody else looks at the weather, but the weather seems to me to be concerning enough to reject Friday's weakness. I think the outside markets should find stabilization activity this week and probably some recovery attempts. So I think that provides an environment that the grains can rally on. And I think we're looking at a situation that if this weather concern pans out and continues for a week or 10 days, we could see a pretty significant price recovery here. As far as producers are concerned, this type of price recovery over the next 2 or 3 weeks, if it unfolds, needs to be seen as a long-term selling opportunity and an opportunity to get caught up on sales, which most everyone is lagging from what a normal percentage of forward sales would be. So hopefully we'll get that opportunity to make some new crop hedging opportunities here again. For the DPP Grain Desk, this has been Duane Lowry. Thank you.